Raymond James Chief Investment Officer Larry Adam joins us now. Larry, jump in here. Kind of using the launch point of what you think the situation with tariffs is now post our first trade deal.
Well, first of all, just giving a comment on the UK deal, I agree with your previous guest that, that was an easy one to get done, right? Because they did have the surplus. And for the most part, a lot of things that were actually agreed to are non-controversial. When it comes to 100,000 cars, that's less than 1% of the cars that are sold here in the U.S. And when it comes to steel mills, they really only have one major steel company over there. So it's not a huge thing. But also, I think what's important that you brought up is the reframing of perspective. Because President Trump, on the campaign trail, talked about 60% tariffs against China and 10% universal against everybody else. And everybody thought it would get moved down from there. But when he came in and talked about it the first time on Liberation Day, it was much higher. But ultimately, we may get down to that level. So my point is that I think the worst is over. We're probably not going to see those massive tariffs that were talked about on April 2nd. And ultimately, I think that we're going to get some of these deals to bring it down. But in the end, I still think we're going to get about a 15% effective tariff rate by the end of this year.
Larry, I want to frame two ideas that both are positive for trade. One is negative for the president, one is positive for the president. So here's idea number one, is that this deal with the UK shows that the president is not interested in cutting off trade, but will do trade deals that he believes are beneficial for the U.S. and make some concessions to the other side. The other way which you frame it, which is not so positive for the president, and I don't know that the market cares how you get there, but that he's panicking here, and he's really worried about empty cargo ships and the macro impact of the huge tariffs that he has in place, wants to get a deal done, and wants to get this tariff issue behind him.
Yeah, I go with the latter there. I am worried. That's why I think there's peak economic uncertainty coming. Because if you look at what we've had to do because of these tariffs, we've taken down our GDP forecast from 2.4% down to 1%. And if you look at first quarter GDP, if you look at first quarter earnings, they were all pre-tariffs. But going forward, I do think that these tariffs are going to have a big impact, as I mentioned, on both the economy and earnings going forward. And if you look at, you were talking about the potential for shortages and, bare shelves. Right. If you look at the average retail inventory right now, it's about 35 days, which means that maybe in another month or two, we could see some shortages on the shelves.
So, but real quick, Larry, are you saying the market is wrong here? They're very excited about this deal. Up 1.4% on the Dow, 1.3 on the S&Ps.
Yeah, I think the market likes the narrative and it likes the optimism. But in the end, I think that we are going to be disappointed because of the economic negative impacts that it is going to have on this economy and earnings. So as an example, with these effective tariffs going into place at about 15%, I think the consensus earnings, which is right now at 265, comes down to around 250 to 255. That downward pressure on earnings is likely to unnerve the markets a bit as we go through this year. And I think you're going to see more volatility in the markets.
All of that said, you're a buyer of the Mag 7 in particular here. Is that right?
Yeah, I think that that's an area that's a little bit more insulated from these tariffs. If you look at, they have some more pricing power. If you look at their earnings, they have the second best earnings growth for this year. If you look at their valuations, a lot of the bad news is already priced in. If valuations for the big mega cap tech stocks is basically at the lowest level relative to the market since 2017, right? So I think you're getting in at a pretty attractive valuation point. And then with all the cash that they have on their balance sheets, what are you seeing? You're seeing CapEx continuing to increase. You're seeing buybacks increasing, and you're seeing dividends increasing. So to me, all of them still point to a positive direction for those big mega cap tech stocks.